Everyone wants to grow rich, but not everyone is clear about the path to reach there. People often hear advice from investors to focus on stocks and bonds for portfolio growth, and that makes sense. These assets are popular for building wealth, but they're just the beginning. To genuinely enhance your financial well-being, it's important to explore the full spectrum of options within the world of investing. We'll explore a range of investments from secure fixed deposits to the cryptocurrencies, revealing stories of regular people turning their investments into significant wealth. Ever wondered how a small startup investment or owning a simple coin could lead to financial success? We'll share strategies, risks, and inspiring tales that could guide you toward financial freedom. This goes beyond money. It's about providing you with knowledge and options. So get ready. We're heading into a journey of building wealth. You might discover the key to unlock your financial possibilities in this video. Number 1. Fixed deposits. In certain countries, these accounts can provide interest rates much higher than regular savings accounts. Essentially, you earn extra money by simply keeping your savings in the bank. It's a secure and reliable method to increase your funds. Fixed deposits are often referred to as the sleep-easy investment due to their low risk. The trick is to locate a bank offering the highest interest rate and terms that suit you. The key is to let your money work for you, even while you're asleep. Number 2. Peer-to-peer lending. Next up is peer-to-peer lending, where you can directly lend money to individuals or small businesses. It's a neat way to assist others while earning some extra cash. Kind of like playing the role of a mini bank. Returns can be substantial, exceeding those of traditional savings, but it comes with added risk. Here's an interesting tidbit. The peer-to-peer lending market is expected to reach $58.91 billion by 2027. The key is diversification. Avoid putting all your money into one loan. Spread your investments across various loans to handle the risk effectively. Number 3. Index funds. These investment vehicles follow a market index, such as the S&P 500. Consider this fact. If you had invested $1,000 in the S&P 500 in 1980, today it would have grown to over $20,000. This underscores the huge potential of the stock market. Index funds offer a cost-effective entry point into the stock market. Number 4. Rental real estate. Rental real estate means when you buy a place and let someone rent it. It's awesome because you get regular money and the property value can go up over the years. Fun fact, more people have become millionaires through real estate than anything else. The trick is to pick places where lots of folks want to rent, like near colleges, in the city, or where tourists hang out. It's not just about getting any place. It's about finding the right one in the perfect spot. Number 5. Precious metal. Now let's talk about precious metals like gold, silver, and platinum. When there's a financial crisis, the price of gold usually goes up because it's considered a safe option. Investing in precious metals can help protect against inflation and economic uncertainty. The key is getting the timing right and finding the right balance. You don't want all your money in metals, but having some can be a clever move. As the saying goes, don't put all your eggs in one basket. Diversifying your investments is the way to go. Number 6. Collectibles. Now let's explore collectibles such as art, wine, and coins. Fun fact, in 2013, a rare coin was sold for over $10 million. Yes, you heard it right, $10 million. While not all collectibles reach such high prices, investing in them can be an enjoyable venture. The trick here is to do your research. Knowing what makes a collectible valuable is key. Additionally, keep in mind that patience is crucial with collectibles. These are long-term investments that often increase in value over decades. Number 7. Intellectual property. Next up at number 7 is intellectual property, making money from ideas. This involves things like patents and royalties. Just imagine earning cash every time someone uses your idea, like getting paid whenever a hit song of yours is played. A single patent could be super valuable, worth millions even. Think about common problems and what solutions people might pay for. Remember, great ideas bring great opportunities. Number 8. Retirement accounts. Let's discuss securing your future through retirement accounts, such as IRAs and 401(k)s. Here's an interesting thought. Starting with a yearly contribution of $3,000 to an IRA at age 25 could result in over $700,000 by the time you reach 65, thanks to the compounding effect. Planning for retirement is a step you can take at any stage of life. Number 9. Corporate bonds. Now let's talk about high-grade corporate bonds. These are essentially loans you provide to large companies. It's a safer bet than stocks, although the trade-off is lower returns. An intriguing fact, historically, corporate bonds have shown lower default rates compared to other types of bonds. The strategy here is to seek out companies with robust financial health. You're aiming for stability and reliability. Just keep in mind, in the world of investing, sometimes the slow and steady approach is the one that wins the race. Number 10. Dividend-paying stocks. Now let's dive into dividend-paying stocks. These are shares of companies that share some of their profits with you regularly. Here's a cool thing. Some companies have been doing this for more than 100 years. The trick is to find companies that always pay dividends, usually the big and well-known ones. It's like a double deal. You can make money from the stock growing and also get regular cash payments. Number 11. Investing in businesses. Many successful business owners have businesses they don't run every day. It's all about making money without working all the time. The trick is to invest in a business that doesn't need you around all the time, like a laundromat or a car wash, something that works well with a good manager. The plan is to pick a business that always has customers and isn't too complicated to run. It's like planting a tree and getting fruit from it every year. Number 12. Tax-free bonds. Now let's talk about being a tax-smart investor. We're diving into tax-free bonds. Here's something interesting. Tax-free bonds, like municipal bonds, might sometimes give you a higher return after taxes compared to taxable bonds. These bonds are often used to finance public projects, such as schools and highways. The strategy with tax-free bonds involves thinking about your tax bracket. If you're in a higher bracket, the savings on taxes can be quite substantial. It's all about making savvy decisions that maximize what you keep from your earnings. Think of it as holding on to more of your well-earned money. Number 13. Real estate crowdfunding. Let's talk about real estate crowdfunding, the collective investor. This is a more recent way to invest in real estate. You team up with other investors to support a property project. Fun fact, some real estate crowdfunding platforms have provided annual returns ranging from 8 to 12%. The strategy is all about diversification. Spread your investment across various properties and locations. It helps lower the risk and lets you experience being a real estate mogul without the heavy lifting. It's like being part of a team where everyone shares in the success. 14. Real estate investment trusts, REITs. Now let's talk about real estate investment trusts, REITs, a way for everyone to get into real estate. With REITs, you can invest in bundles of real estate properties. Here's a neat thing. REITs have to share at least 90% of their taxable income with shareholders, so you might get regular income from them. Number 15. Investing in startups. Now let's chat about investing in startups. Basically, putting your money on new and exciting businesses. It's a bit risky, but if it works out, the rewards can be huge. Just think about folks who invested early in companies like Facebook and Google. They made a ton of money. But keep in mind, not every startup becomes a big success. The key is to do your homework, understand the market the startup is in, and look for founders who are really passionate and have a clear plan. It's a bit like going on a treasure hunt. Not every map leads to gold, but the right one can change your life. Number 16. Cryptocurrencies. It's like the Wild West of investing, kind of thrilling, but a bit unpredictable. Here's a cool fact. Bitcoin, the first cryptocurrency, started back in 2009 and was pretty much worth nothing at first. Now one Bitcoin is worth $43,548 USD. But never forget to be cautious and do your research. Only put in what you can afford to lose because cryptocurrencies can be all over the place. Prices might shoot up or drop like crazy overnight. It's a bit like surfing. Super exciting, but you gotta know how to handle the ups and downs. Number 17. ETFs. Let's talk about ETFs. They're like investment bundles of stocks or bonds that you can easily buy and sell on the stock market. The first ETF was made in 1993. With ETFs, the trick is to diversify. They let you spread your investment across different things with just one buy, like taking a slice from the whole pie, not just one part. This helps lower the risk, and you still get to be part of different areas. Number 18, microfinancing. Now, let's talk about microloans, small loans that can make a big impact. These loans are often given to entrepreneurs in developing countries. The average microloan is around $1,000. Even though they're small, they can have a significant effect. When you invest in microloans, you're not just putting money in, you're investing in people's dreams. It's like planting seeds in a garden and seeing them grow. Number 19, annuities. Annuities are financial products offered by insurance companies designed to provide a steady income stream during retirement. The idea is to contribute a lump sum of money or make periodic payments to the insurance company. In return, the insurer promises to make regular payments back to you, often for the rest of your life. However, it's crucial to carefully understand the terms and fees associated with annuities. Different types of annuities come with various features, and there may be costs involved, so it's important to be aware of these factors before deciding if an annuity is the right choice for your retirement strategy. 20. Treasury Inflation-Protected Securities. TIPS. The inflation fighter. TIPS are government bonds designed to adjust with inflation, and they made their debut in 1997. What's interesting about TIPS is that they provide a shield against inflation. The strategy here is to safeguard your purchasing power. As inflation goes up, the value of TIPS also rises. It's akin to having an umbrella in a rainstorm. It won't stop the rain, but it'll keep you dry by preserving the value of your investment amid inflation. That's it for today. I hope you loved today's video. We have plenty of content to guide you in making wise financial decisions. Remember to subscribe and click on the bell icon to stay updated on our newest videos. The next phase of your financial journey is just around the corner.